What do you think the probabilities of it happening are from your perspective?
The probability of it happening is 100%. And the reason hear me out, hear me out. And the reason I say that is because whenever you have a distortion, it takes energy to create the distortion, whether you're trying to, short something up, push something down, or short something down, prop something up, whatever, right? It takes energy to do this. Now, the next question is, and this is, I think, more to your point, what is the probability of this happening within a set time frame? Let's say within a week, a month, a quarter, a year, or whatever. That, I think, is the real question here.
I wildly disagree. What have we learned from the smartest people ever? There's always one common denominator. There are no certainties. There are only probabilities. And you are speaking that GME going to the moon is a certainty, and that is where you've lost consciousness because
no. No, I can tap back into a deeper magic than that, and just look at the law. Look at the second thermodynamic, or what's the second law of thermodynamics? Entropy will always increase, or is it decrease? Whichever way it's supposed to go. The point is that energy will always be expended, and you can even make an argument too when you just look at humans in general, right? We are hardwired to do things with as least energy as possible, or to try to save energy, to be as energy efficient as we can.
Delusional, first off.
No, I'm telling you, my point is, you can only muck with the price for so long, especially if it takes energy.
No mucking. What if all of the signs that you're seeing are wrong? What if you are completely self-deluding yourself to thinking this is what's happening because you believe it so strongly, and you turn every single thing that you see into a bullish case when it could just be complete noise? I mean, you have to see that as a probability that you are just completely wrong. And the fact that you're saying it's a 100% certainty that this is going to happen, you need to rethink something, because there is nothing that is a certainty. I, on the other hand, think that GME, say, going MOAS, which I like, if it does happen, I think it will be 10, 20, 50, $100,000 per share. But I think the probabilities are many, many times lower, like 10%. The way that I'm playing it is, okay, let's say there's a 10% chance of something happening, but if it does happen, you will get extraordinarily rich. Well, I'm going to allocate a few $1,000s, which is really not that much to me, but it is something that is an appropriate amount with the asymmetry that this has. Justin, you're doing something similar, but you're allocating a lot more of your resources. You have a lot more resources, but you do have a lot of passive income coming into where this is not going to change your life if nothing happens. You just have so much mental and emotional bandwidth into this stock that I don't know if you can recover. I really don't.
Yeah, the collateral of Justin's emotional capital will just collapse.
I do mean that in a sincere way, because you're living a life as if it's already happened, and
I don't have the Gigi yacht. I don't have the Falcon. I'm not living the life. But I certainly, and maybe you too, have certainly planned out some changes that will be happening right about day one, day zero, on that. No, well, let's get back to the original point. So right now, you've got several structural cycles. So just as a quick recap, the general thesis is that large and sophisticated market participants have gone short retail, particularly GME, through various modus operandi. These ways to go short have the effect of obfuscating the short interest. You can kind of see ripples in the water, even if you can't necessarily see the stone hit the water. So you see kind of around the edges of this. Josh and I, we were just talking about the puts that are expiring later this week, these nonsensical puts, was it like the 136,000 contracts? So 13 point however odd million shares, for that at 50 cents. It just doesn't make any sense. Unless, of course, there's something else or there's some other function that it's serving. So getting back to, again, the one conception people are asking for, I'm very curious to see what happens at the end of January, or through the end of January and through February, for just holding an asset. That's easy to do. You just hold it, directly register it, get it in your name, and so be it. That's that. If you're trying to start playing with options, then you've got a time issue, because now options will time decay. And even if you think it is going to happen, but you get the date of the options wrong, well, you're still wrong in that case, or you will lose your initial capital, and it won't be for naught.
Yeah, all the catalysts lead me to believe if it doesn't happen within the next 2 months, and I'm someone who's extraordinarily skeptical of the whole thing, and I'm playing it appropriately, but all the catalysts to me are leading up for the next 2 to 3 months. So if there's no price movement, I will completely rethink the thesis and just say, am I wrong? But here's the deal. The way that I am playing it, I have options. I have like the April contracts, and I go as far out as the money is possible to, like, I think it's the 500 strike or some whatever, as far out as I could go. I'd get the $500 strike, and I have, call it, 10 options. So I have 10 contracts at $500. So I'm buying the right to buy 100 shares of GME at $500. And if this doesn't take place, I think I want to exercise all of those contracts. That means I would have 10,000 shares, which, or no, 1,000 shares, which, if, let's say, GME goes to 10,000 a share, that is a decent amount of money. So I think the probabilities of this happening are very low, but the asymmetry, if it does happen, wildly outweighs the reason why I wouldn't want to get in, because there's a ton of pretty clear evidence that there is something going on, which would lead you to believe that something will happen, because when there's smoke, there's often fire, as Justin always says. So I'm playing it appropriately, having a few $1,000s, but with as absolute much leverage as possible, because my goal would be to put in as little capital as possible and receive the absolute most amount of shares as I possibly can from that.
Yeah, I think so. Maybe Josh, this is kind of not a direct answer to the timing question, but maybe it's like an interesting thought experiment. If you go back in time to January of 2021, so when the so-called sneeze happened, I'd be very curious to see what would have happened. And I don't know if you had a chance to watch those videos that I've dropped from the insiders, basically saying, look, if retail, who FOMO'd in, when things started going up, actually exercised their options, people would have been in a world of hurt. The implication being, in late January of 2021, the market makers who wrote call options, let's just say the delta hedge was done appropriately, but the delta hedge didn't account for retardation. The delta hedge did not account for the extreme emotional response that came in from retail FOMOing in. And so the point is that if retail had exercised these contracts at about that time, and this was also the same time, the various, again, as I very poorly understand it, the various short mechanisms in order to keep the people who have gone short floating around in business were having to be rolled over, which creates pressure on the stock. The point is that if you created a gamma squeeze by having people exercise options, and so the option market makers had to run into the market to start acquiring shares, that would have been, I suspect that would have let the price action continue. But when people cash settled their options, that's probably what helped diffuse it. Anyways, the takeaway for all intents and purposes, at least you're doing it, I certainly plan to do it as well, is to exercise whatever options I can versus cash settling. I'll take delivery of the shares, or as many shares as I can take delivery of, and then assess the situation and go from there.
Yeah, and if this does happen, Justin will be having a ton of pressure on these guys, because with the amount of contract that you'll potentially have, that would equate to about 40,000 shares going, because Justin goes all the way out the money 2 years at the 950 strike and just buys options. And yeah. I mean, if it does happen,
well, yeah. So I think probably what I would do is, so I do a very speculative position, but in this particular situation, I would probably throttle it back to like June-ish. Hold on one second. It would be, I would probably look to June, which would be the 7th. So there's only one contract in June, the June 17th contract, and I might, yeah, I probably would go pretty far out of the money.
Yeah, you can go 650 in June.
Yeah.
Yeah.
Or actually, I take it back. Probably what I do is I would probably see what contracts had the most existing open interest in it, and I would probably have like a layered position. Like I would probably buy some I would find the closest at the money contract with the most OI. I would probably start there, and then I would progressively go through and load up. But I would say maybe the only really big difference between you and myself on this front is that I'm much more skittish when it comes to timing, and so I definitely like the idea of sitting in a very long dated option contracts. And I know I pay through the nose, and I do pay through the nose for the time. But June is probably the contract. The June 17th contract right now is probably the one I would focus on versus like an April one. But that being said, the one thing I would suggest that anyone, or I guess what I suggest anyone should do is try to educate themselves and figure out more about this stuff. But I would be, speaking for myself personally, I'd be very reluctant to buy weeklies. I'd be very reluctant to buy anything, less than, 2 months out, because I just don't know the timing. And And the other thing too, like if someone's back is to the wall, like things that they might have not done or things that might have appeared preposterous to them are way too risky and suddenly become not as risky, or that risk is less scary than the risk of like failing, going bankrupt or whatever. And so I think that if someone or some group of sophisticated market players were to be short and they knew that their time was up, why wouldn't they try to do anything they could just to delay the inevitable, even if it meant taking more people down with them?
Yes. And here's how I will actually, my process of selling. So let's say I have 1,000 shares. I get to exercise all my options. I have to sell a few just to cash settle the whole thing. So if you have 950 shares, how do you actually want to allocate that to selling? My plan would be, okay, here's the deal. I want to be selling for the next 15 to 20 days, as I think that that's probably going to be the full meat of the run. So I will sell no less than 50 shares a day and no more than 100, because you don't want to FOMO and sell or when it's going down or up. You just want to get as much gains as you possibly can. So every single day I'm going to sell at least 50 and no more than 100. So let's say that's $10,000 a share. And I'm like, okay, here, I just have to sell as much as I can because I don't know what to do. Okay, I'll use my max. I'll sell 100 shares. The next day, maybe it goes back down to 7,000, or maybe it goes up to 50,000. Who knows what the massive volatile swings that we'll see. So my goal is just going to be to slowly sell over a 15 to 20 day period.
Josh, let me ask a follow-up question. So this is an interesting idea that dawned on me. Would you consider, while this is going on, to basically sell covered calls?
No,
you'd actually sell the underlying. Okay.
Because who knows what the fuck is going to happen when this is going to be one of the craziest times of the stock market history if this does happen, because it will be a complete breakdown of the algorithms and something that we've never seen before. So if it does happen, I don't want to mess around with option strategies. I just want the physical shares that I'm going to sell slowly throughout each day on a 15 to 20 day time frame, and that should be enough to get a decent amount of profit if this does happen to the extent that we think it possibly could, of course.
Okay, so just to put a bow on that, basically over the course of, let's say, 2 to 3 weeks, you would look to essentially dollar cost average out of your position. And yes, some you'll sell high, some you'll sell low, but ideally you'll be selling at you'll hopefully average up to get over the peak of the squeeze.
And just because you don't want to dump all your shares at one time, because let's say something insane happens and this goes to say $1 million a share, and you FOMO'd out because you're like, there's $10 million in my account, I have to dump it all. Well, you just missed out on 100 million. I mean, this is just pure speculation. This is something just insane to even talk about, Justin. And I don't like to, because I don't want to FOMO into anything. I just want to think about this as rationally as possible. And the probabilities of this happening are very low. And you have to understand that when you're open in a position. Just understand that if this does happen, it will change your life.
As Louise said from Bob Burgers, you will have so much money, you will never be happy again.
Yes, and that comes with problems itself. And this is something that me and Justin Justin's done a lot of mental preparing, because if this does happen, what are you going to do? Because it will be a massive wealth effect that, like, from having you will have too much money depending on how many shares you have and at what price you sell it at. What are you going to do, and how are you going to allocate those resources? Who do you tell? Who do you help? And will it make them better off or worse off for it?
Yeah, because it's not like a GME, if it were to pop off, it's not so much just GME popping off. It's probably the collateral damage that'll cause for the market, which is just a very long-winded way of saying the people who hold GME, or the people who are holding shares that are going through a squeeze, will be the tremendous beneficiary, and everyone who is not holding that. And let's just say you're some like average investor, you've done everything right, you have a well-diversified portfolio, et cetera, et cetera, et cetera. Like you will probably be impacted. That such an investor such as that will probably be impacted negatively. And I think the honest answer for that is don't sell. At least sit on the losses as long as you can. Hopefully it'll bounce back in time. But yeah, this isn't going to happen in a vacuum. And so the media, the feelings, the emotion, the government, the regulators, there's going to be a lot of moving pieces in here.
If it happens. And I can't stress this enough, because it is the most important part. You can't think of these things as if they are going to happen. You have to see what if you are wrong, because there's a very high chance that you are completely wrong with everything. But if you are not, then congratulations, my friend. We shall see what happens within the next few months. And maybe me and Justin just stop making videos because we are sailing off in Justin's Giggy Yacht.
Giggy Yacht, yeah. One step at a time. But yeah, Josh, anyways, that's it. So fun times to see. And like I said, end of January, February, we'll see what happens. See if we get 2.0.
Oh, good luck, my friends. Good luck.